Hello everybody, it's Yashar here, back again with another video, and in this video I'm going to show you every single stock that I own in my Wealthsimple and National Bank direct brokerage accounts, and update you on recent changes to our stocks portfolio and the new stocks that I bought during the last 2 weeks. I increased my stake in MasterCard, I added Louis Vuitton Hennessy ADR as a new stock to my portfolio. Meta, as our largest holding, is continue its epic comeback from $88 per share to now $212. Alimentation Couche-Tard, as one of my recent buys, hits a new all-time high this week. Canadian bank stocks, particularly EQ Bank, are recovering from Silicon Valley Bank fiasco. And the last but not least, the dollar figure of my own portfolio at the moment is close to $74,000, almost $72,700 in Wealthsimple and $1,500 in National Bank, and our combined grand portfolio of me and my wife worth around $92,000 today, which is a new record for our stocks holding in terms of the dollar value. We have a lot to cover in this video, so let's jump right into this. In this channel, things are a little bit different than other finance-focused YouTube channels, and I will try to update you every 2 or 3 weeks with full transparency and show you the exact performance of my portfolio. I don't tell you what stocks to buy because I don't know about your investment goals, your risk tolerance, and your financial situation. But I will tell you what I am doing with my own money, and I show you the process of evaluating different stocks. I used pretty much all of our investments in 2020 to buy a house, and therefore started this new portfolio in January 2021 and slowly dollar cost average into the stocks that I found them undervalued or fairly valued but with great quality. So yeah, I first just want to start with asset allocation. This is a nice graphical representation of the stocks that we hold in our combined portfolio of me and my wife. Meta is currently our largest holding at 20% weighting. Aritzia is our second largest position with 16% weighting. EQ Bank is the third with 13% weighting. Brookfield is the next with 12%. TD 10%. Google 8%, and Granite Tree with 7% weighting are our largest holdings, and these 7 stocks together form almost 85% of the value of our stocks portfolio at the moment, which shows how much I believe in these companies and how much we are concentrated in this position. Of course, the plan is to build a larger stake in the rest of these 7 stocks that we own, so we can have a much more balanced portfolio at the end. In terms of the sector allocation, financials and tech are still our largest holdings, followed by consumer discretionary stocks. In consumer discretionary sector, we used to own only Aritzia, but I added a new stock to this category in the last 2 weeks, and that stock is Louis Vuitton Hennessy ADR, which is the over-the-counter version of Louis Vuitton stock, which is trading on European stock exchanges. This is a company that I am following for a few months now, and I admit I missed an amazing opportunity to buy this stock during the market pullback in October. And that was my main motivation to open a new brokerage account with National Bank, basically a new brokerage account other than Wealthsimple, to be able to buy OTC or over-the-counter stocks when opportunities like this present themselves. Anyway, I pulled the trigger finally and bought a small starter position in this great business, and unfortunately the stock is just climbing up and up, and I didn't have the chance to buy more shares so far. This stock actually hits a new all-time high today, and my starter position is up over 5% so far. This is a stellar business with extraordinary profit margins and 75 world-class brands under their umbrella. They have a family of various wine brands including Hennessy. They own the highest quality fashion brands including Louis Vuitton itself, Marc Jacobs and Fendi. They own a family of perfumes and beauty products. They own luxury and semi-luxury brand watches like Bulgari and Tag. They are in retail business with large stores like Sephora, and they even have a luxury cruise business. I will talk about Louis Vuitton stock in future in more detail, but this is an international business that I definitely wanted to own in my portfolio. I also added 1 share of MasterCard here to increase my stake in this stock. As you can see, I own these stocks inside my National Bank brokerage account. I tried this platform in the last 3 weeks, and so far I've been impressed. I have a review video about National Bank platform which should be released during the weekend, potentially on Sunday, so stay tuned for that video. Okay, now let's look at my personal Wealthsimple account, excluding my wife holdings in her own portfolio. Overall, I have close to 72,700 Canadian dollar worth of stocks in this account at the moment. My TFSA, which consists of only Canadian companies, is pretty much flat at the moment in terms of the performance. It's down 1.5%. I analyzed pretty much all of these stocks before, and I will leave a link to those videos in the description box below. So let's go stock by stock and see what is going on with my portfolio here. First stock here is Allocation, which I added to my portfolio almost 2 months ago. I'm up over 11% on this position so far. Couche-Tard is a company with more than 14,000 convenience stores and gas stations around the globe, which has a fantastic balance sheet and growth potential. Right now, I have a very small starter position in this company with only 15 shares. I had planned to consistently buy more shares of Couche-Tard in 2023 and scale this position to at least 5% of my portfolio, but this stock is just want to go up and barely moves downwards to give me opportunity to buy more. In fact, the stock hits a new all-time high just this week. I really wish it comes down in price so I can add more, but overall, this is a great and well-run company, and I'm happy to continue to hold my small stake in this company if the share price doesn't come down in future. Next, we have Aritzia, which is a fast-growing Canadian fashion retailer with various physical locations in Canada and US. And it is one of the largest positions in our stocks portfolio. I'm up around 2% on this position so far. Aritzia share price went down significantly during the last few weeks due to the fears of a recession, but the recent earnings report of Lululemon, which had a great guidance, caused Aritzia stock to jump as well. I used this opportunity to buy 50 more shares of Aritzia when everybody was panicking about recession, and now I own 200 shares of this company in my TFSA, and my wife also holds 135 shares in her own TFSA. I think the risk-reward profile of Aritzia is still attractive right now at this share price. My plan for Aritzia is to just hold this stock at the moment, and I'm perfectly happy with my weighting in this position. The next position in my TFSA is Brookfield Corporation. I definitely believe in this company and the management team at Brookfield, and I basically doubled down on this position in the recent market pullback during the last month. And it is now one of my largest holdings. I really believe Brookfield can outperform the market in the next several years, and it is undervalued right now. I think global inflation is overall positive for Brookfield in the long run, as they can use their huge amount of available capital to buy cheap assets around the world, and inflation will help the value of their assets to increase dramatically in the long run. I'm happy with my weighting in Brookfield at this point and have no plan to buy additional shares. Next, we have Canadian Tire, which I added almost 2 months ago to my TFSA. I only have 15 shares of Canadian Tire and I'm already up almost 16% on this position. Canadian Tire is a company with multiple revenue streams ranging from retail businesses like Canadian Tire stores and Sport Chek stores to financial services and real estate business. Similar to Couche-Tard, I wanted to buy more shares, but the share price just kept climbing, and I hope Canadian Tire share price drops more in 2023 so I will be able to scale up this position and accumulate more shares. I want to have close to 50 shares of Canadian Tire in my TFSA overall. Next, I have EQ Bank, which I always called it a golden ticket of my portfolio. It is one of the companies that I believe will reach a new all-time high in the next 2 years as they have excellent growth roadmap. They have fantastic balance sheet and business fundamentals. They are focused on returning value to shareholders. They have great margins, which are growing as well. And overall, everything is going well with this company. The stock sold off huge during the Silicon Valley Bank fiasco and has been recovering slowly ever since. And it is currently flat for me. It's basically 0% up or down. I own 200 shares of EQ Bank, and I'm excited to hold this stock for a very long time and reap the benefits. Next, I have two REITs, two real estate companies. Granite REIT, which is an industrial real estate company with many large warehouses around Canada, US, and Europe. And then Killam REIT, which is a residential real estate company in Eastern Canada. Both are amazing REITs with both growth potential and consistent monthly dividends. I'm basically flat on Granite. I am happy with my position in Granite, and this would be another hold for me in 2023. Regarding Killam, I'm down almost 8% so far. I bought a few more shares of Killam in the last 2 weeks and have planned to continue to add to my Killam position in 2023, as my target share count for Killam is 300 shares. So again, 2023 should be a year that I consistently buy Killam REIT. Finally, we have TD Bank, which is down almost 5%. I bought 20 more shares of TD during the Silicon Valley Bank panic to increase my stake in this Canadian bank. I think TD is the best Canadian bank stock at the moment in terms of the quality of the business and their future growth path. TD is a position that I will probably never sell it and just try to collect those juicy dividends and reinvest that cash flow into my other stocks. If I have to deploy cash to these TFSA accounts today, I would probably buy more Killam and TD with my cash, as I'm either happy with my position in other stocks or they are not in my buy share price range yet. Okay, we looked at all of my TFSA stocks, so next let's look at my RRSP. I plan to hold my US and international stocks in my RRSP account. RRSP portfolio is performing well recently and I am up almost 6% in this account so far. So let's look at the stocks that I hold inside this account. As you can see, I have 4 stocks inside my Wealthsimple RRSP at the moment. I have 10 shares of Amazon, which is up 8% so far. I want to buy more shares of Amazon if the share price drops below $100, but if not, I would just hold my small stake in this business. I also own 51 shares of Google here, and I am up 3% on this position so far. I really want to buy at least 9 more shares of Google and scale up my position in this company. I think Google is still undervalued, and I hope I can have the opportunity to add to this position soon. Next, we have MasterCard, which I recently added to my portfolio. I think MasterCard is an amazing business with a fantastic balance sheet, growth potential, profitability metrics, and excellent return on invested capital. The PE ratio is a little bit rich, but sometimes you have to pay a premium to own such a great company. I bought 1 more shares of MasterCard in my National Bank brokerage account, and hopefully we can have another market downturn so I can build a much larger stake in this company at cheaper price. Finally, we have the big boy here, Meta. If you remember, I was down almost 68% on this position at some point, and I always mentioned that I believe Meta will come back because it has strong business fundamentals, and it was just an overreaction of the market to Zuckerberg spendings. Yeah, once Mark Zuckerberg started to pivot from spending on metaverse and family of apps to efficiency and reducing the headcount of the company, market flipped and Meta is on a run from $88 per share to now $212 per share. This was a good lesson for everybody that if you buy a good quality business, even when market overreacts and share price goes down, you have nothing to worry about. And you can simply buy more shares to bring your average price down, because over time, market will match the intrinsic value of the stocks. I didn't buy the dip as much because my wife was buying the dip constantly, and she also owned 35 shares of Meta right now with an average price of $150. So our overall position in Meta is in green by 7%, but for me personally, it's still down 16%. My plan for Meta is to just hold the stock at the moment. So overall, our plan with all of these stocks that I show you today is to hold or add to them. There you are, guys. I hope you enjoyed the video and my transparency in showing you all the positions I have in my own portfolio and also the performance of our stocks. If you enjoyed the video, consider subscribing to the channel to see similar videos. Thank you for watching, and I hope to see you guys in the next video. Farewell.